Yo guys, what is up? Welcome to So Crypto, your home for Crypto TA. I am your host Martin, and today we're going to be looking at Bitcoin 25K. Now, if you are catching this from live, welcome in. If you're catching the replay and you have any comments for us, please leave us a comment below. I really want to know what you're thinking. Also, if you want to be up to date with the latest crypto-related news and technicals, make sure you subscribe to the channel and hit the like button and the bell. That way you will be notified when we go live. And if you want to keep on chatting with us whenever the stream is on, join us on the Discord. Links have gone out. They're going to be pinned here on top of the chat. How's it going, Scrog? How's it going, Elon and BL? How's it going? Thank you for being here. Thank you for joining me tonight for an awesome stream. Man, crypto's rallying, right? I almost didn't come live tonight. I did get out early from the restaurant, earlier than, I usually been getting home. But daughter's been throwing up like crazy, so yeah, I had to go get some medicine and things like that, and yeah, but things should be better now, I guess. But Worth, what's up, dude? Scrog, yeah, it's been a nice couple days. Yeah, I know. Talked about it on Monday, right? How talked about it last Monday and also this past Monday that if we saw the bearish indicators failing to play out, that we could be in for a the start of a new small bull trend. I'm going to say we're not out of the woods until we get above 25,000. And that 25,000 comes with us getting above that 1.03 trillion dollar mark, right? We need to get above that one area. And I'm pretty sure by the time we get there, we're going to be probably hitting around 25,000 Bitcoin, right? Somewhere around there. But, 761 billion held nicely. And, once we get above that 20, back tested it once. Boom, use that as spring platform, and now getting some nice expansion to the upside. Are we out of the woods? I'm going to say not yet. Not yet, and I'm going to explain why in a second. Once we start looking at the Bitcoin chart, right? But at least here, low to high, coming up higher and more positive momentum. So here in the short moves, right? The short moves, we don't have anything. The only thing that we have on a much larger move against the RSI, it is this divergence, right? It's divergence here. It's hidden bearish. I'm not sure it's going to trigger with a lot of strength, but I think this is what we could be looking for a potential flag to happen, right? I was talking about the flag on Monday and how we need to flag a little bit. We just been getting continuation, which is fine. Just remember that extreme continuation comes also with some heavy pullback, right? So I'm not sure we're out of the woods until we get above that 1.03 trillion dollar mark. Now I'm gonna check the 20 moving average. For that, I need to leave the Bollinger Bands out, and I just put it here to 100 and see where we are with regards to that 200 moving average. Right, we are getting above it. That is good. That is good. That is good because it could start the new bull run. Right. If we look at Bitcoin, right? If we look at Bitcoin or crypto in general, and I think we're gonna be better off when we look at Bitcoin overall. But last time, once we broke below that 200, we stay there for a while, right? So we can say this is the primary break, or we can use this as a main break, I would say, right? So here, 327 bars. We broke here. Right, we also have a sort of fake break here. We can say our actual break came here with a back test and rejection, right? So once we broke there, that was approximately 373 bars, right? So 373 bars are 372 days that we were there. And just to get this one here again, somewhere around here, 222, right? So we're about on the same time. Scale wise, or same time has elapsed, and we could be talking about, yes, could this start a new bull run? It could. Are we gonna say that it has? Not until we get confirmation that we're above that 200, right? We need to close today, and it's not gonna be a good close today because it's gonna be Saturday, right? So Saturday, Sunday, we know there has been volume so far, which is good, but we know the weekends tend to sometimes be rubbish. So they might not be a good indicator. I would say come Monday, if we are still above the 200 and we close there on Monday, then yes, we could be talking about us being out of this bear market, or starting to get out of the bear market, or trying to get out of the bear market. Now, if we see what happened last time, where we tried to rally us when we hit the 14,000s, right? Or somewhere, sorry, I'm looking at full market cap, not Bitcoin, right? But we hit the 14,000s, and then we started to break back down again before we actually looked for recovery. Just the fact that we're starting to get that nice rally is fine. But, you know, we might not be out of the woods yet, right? Again, we could still be in for this sort of shop before we actually start getting the next bull run, right? Viral video, what's up, my friend? So that's that regarding market cap in general. Good that we're above that 200 moving average. I think we're going to expect to see something extremely similar on Bitcoin, which we're going to be checking on two charts today, right? The main chart that we've been looking at, and then the secondary chart. I did post stuff today on the Discord and talked about how we needed to flag a bit. And I don't think we're seeing the flags. And ignore the arrows. They're from the 1 hour chart. I'm going to remove them when we talked about them today, because that's stuff I drew for me to be able to explain what was happening on Discord. Right? But we were here on Monday, right? And after Monday, and we were talking about trying to get above that 17,000, trying to get that to that 17,781. As you can see, we broke it. And then we've just been sustainably breaking every action to the upside. So right now we're trying to break that 21,420 mark, right? Or up here. That's the next target. So again, Bitcoin's been doing nice on the short moves here, right? Nothing bearish to look at. On the larger moves, we are about to get rid of the divergence, right? If we get above that 21,400, look at that move from here to here, right? As soon as we get above, it's going to be gone. So interesting to see that Bitcoin is trying to do this. Hopefully by Sunday we could do this. And then we're going to be getting rid of this divergence, which is it's right now hidden bearish. And we know the bearish indicators have been failing to play out, right? So we're sitting here overbought at 89.02. Again, a little bit high, but if we are entering a sort of bull market, or a slight or small bull market, we can stay overbought for a while. I think it's too early to call it a bull market. It is certainly a rally. It's parabolic. Not sure how this is going to go. We need to flag, right? We need to flag. For this to be healthy, we need to get some small flag consolidation before we get continuation, right? There's really not a lot going on here. Let's go to this chart real quick. I think I do have a resistance somewhere around here, 20,800. Let's see if we're getting above. Again, this is the old chart. We haven't been looking at this chart lately because we were looking more towards the action to the downside moves. And as you can tell, we are right at that resistance, right? 20,911. And here we are entering this zone that we were looking for support resistances to be. And so we're going to have a couple of resistances overhead, right? Immediate resistances that are going to be important for us to hold. And these are areas that Bitcoin has either held or rejected, right? So again, important zones that we are hitting right now on the rally. So same stuff that's happening on the other chart as this one. So not really seeing a lot as far as bullishness, right? We already discussed that from here to here, we're not creating anything bullish. So let's go to the 4 hour charts and see what's going on there, right? Let's return to this chart. Let's go to the 4 hour. Andrew, man, I'm not sure if I already said what's up, but what's up? And Alan, with the face turquoise covering eyes. What is up, dude? 4 hour chart. Here we go. First off, a lot of things from the 1 hour came through that shouldn't be here. And I know because they make no sense. So I know this one's from the 4 hour. That's fine. But the smaller ones are from the 1 hour chart. And that's just me not anchoring when I was doing this in the morning. I was really rushing because I needed to get to the restaurant. And so I just drew the lines. And I just wanted to post on Discord real quick for you guys to be able to see what I was looking at, right? So here we go. Let's get rid of these lines. That make no sense where they're at. And then let's go talk crypto, right? Let's get rid of this one. Man. Nice week so far. This is, from the 1 hour as well. So this one's also going to be from the 1 hour. And this is going to be from the 1 hour, right? That's all good. All right. So in the 4 hour, right, we had some bearish divergence. We had some hidden bullish that we were forming. Is this from the 1 hour as well? Yeah, this is from the 1 hour, man. Yeah, no hidden bullish here. We were creating some kind of bearish divergence. And I was talking about the potential flag coming through, right? I think that's what we had on the 4 hour. I'm actually going to bring the Discord so you guys know what I'm talking about. Where's our general? Here we go. All right, so Discord, right? We're looking here at the 4-hour chart. This is running nice on the hidden bullish we talked about on Monday, right? So we had that hidden bullish here. And we're seeing that run happening, which again, it's fine. Not really seeing anything wrong with that, right? This hidden bullish here. And we talked about how nice we were just bouncing at the 20. And here, as you can see, we hit that 20 bounce. And here we're very close to hitting that 20 and bouncing again. So not looking bad. Again, we're running off hidden divergence. We haven't created anything bearish yet. Here, we're creating something bearish by the time I was looking at the chart. So all I was saying is we could be getting to this 19,400 zone and flag a little bit before we actually break to the upside. Right, and here I drew the line because we didn't quite. So here we go. Right? So some strong bearish divergence developed for Bitcoin near resistance. Right, looking good. If anything, could get us to flag, then look for continuation. Right, like the bouncing action of the 20 moving average, and the fact that we have continued to hold it. So again, that's what I'm telling you guys right now. So we're seeing that bounce happening, and how it's playing, and how good it is that we just keep on rallying. All I was worried about was this strong bearish that was starting to develop here, and all I was looking for was just some flagging before we get continuation. We didn't flag, right? We didn't get any flag action. We're getting just continuation. Not necessarily the healthiest, but not bad. Johnson McSandwich says, "Is the bottom in?" we don't know yet if the bottom's in. I'm gonna do something here on the daily as soon as I finish the 1 hour, but I need to leave this chart. Right now, what we see is we're pumping. We're coming back down now on this 4-hour chart. Again, trying to hold that support zone at the 20,890, which if we do and we just flag in the zone, is not going to be bad. We need to flag a little bit, consolidate before we get continuation. Let's go to that 1 hour, man. We're overbought, by the way, also, right? So this is what I was talking about, and I was posting on the Discord for the 1 hour chart, right? So we had strong bearish here, and we had the hidden bullish, and I talked about watching out for, and this is Monday, as you can tell, right? Monday. So here on Monday, we only had this line here, and this line here. And I was talking about seeing if the hidden divergence was going to play out and hold and try to get us above, and if it failed to continue playing out, then how good it was going to be for crypto in general, right? So as you can tell, we developed more strong bearish divergence, and it failed to break us down with strength. We just keep on playing off this hidden bullish back here to the upside, right? So we rallied, dropped a bit, bounced near that 20, right? Created more strong bearish divergence against the MACD and the RSI. And now we've created some hidden bullish. Where's that hidden bullish counter? I don't have it, man. I might have sent it somewhere else. That hidden bullish divergence comes from here, right? I'm just going to draw it. I might have sent it to the daily, man. I'm not sure, but here we go. I know I have the lines here, and I posted them on the Discord. So, yeah, we could always check that Discord chart. So, you know what we're talking about. So, here we go. Bring it in. All right, so again, the lines here, right? Oh, I didn't draw them, but I was drawing them here. So, I might have not have had those lines. I was talking about the green lines as divergence because I saw it. So, kind of there. And I measured it to some extent. So we had the divergence, right? The bullish divergence, and we were going to zoom in real quick. And I'm just going to line them up so you guys can see this a little bit better. And also from here, right, you can tell that we're definitely coming in slightly more negative momentum. Here we are at negative 29. Here we are at negative 32. So strong bullish divergence. Sorry, not strong. Hidden bullish divergence. Potential for action to the upside. And getting the continuation, right? Getting that continuation coming through with a hidden divergence. Now creating bearish divergence, strong once more. And here I was almost certain that we're going to get some flagging happening near that 19,000 resistance, right? Red Bird October. Can you explain all these divergences like I'm 5? Yeah, sure, man. Just one quick second. Let me finish this and I'll explain that. It's not a problem at all. So, bearish divergence, right? Strong. And that should indicate that the trend is weakening. Right, that basically divergence tells us that we are doing something that is opposite on the price action versus the oscillator or indicator that we're looking at, and that just signifies that the trend is weakening, right? So we should be expecting to see a sort of reversal or something else happening. We knew that the bearish indicators were failing to play out, right? So during a bull market or during a small bull run, the bearish indicators don't play with a lot of strength. Just like during a bear market, you might see the bullish indicators failing to play out or not playing out to a lot of strength, right? So, so when we're looking at this, and we're looking for these divergences, right? We're seeing that the strong bearish divergence here that should have indicated the downturn, all it did was move the sideways, and the hidden divergence that developed here, hidden bullish, just made us run even more. So once we created this, and when I was talking about this around 10 in the morning, which is when I posted on the Discord, I was expecting, and I even closed the Discord. Let's open it up again. Where's Discord? Bring it back up. Here we go. So I was posting this around 10 in the morning or so, right? We're gonna be able to see a stamp here. 11, sorry, 11. I was looking at the 11th candle. And it was right before I went on to the restaurant. So yeah. So we were creating the bearish divergence, right? Strong. At some point in time, it was developing. It was starting to develop. We were looking at this first candle or first bar here on the histogram. So this one. And we know that when it starts to develop, we have to wait for it to develop farther. So what we could have seen is, even if we would have tracked all the way to here, which you can see that we clearly stopped at resistance before we actually broke it. Right here closed. You can see here the closing price. I managed to close at 19,485. We have this at 19,496. So we're about $10 of target when we're talking about a $19,000 move. Percentage-wise, it's insignificant. That is a spot-on hit. Percentage-wise, it's not going to affect it. And we know that we could have resisted here. And we probably, at the beginning of the chart, if we go to the smaller timescales, we probably could have seen some rejection happening of this zone because we started on the red, right? We went down, and then we finally broke through. And what I'm looking at here is particularly, the fact that this is not playing out, and we actually managed to get rid of it. So this divergence here on the red, it's no longer there, right? So we no longer have that bearish divergence, and the hidden bullish is just making us run farther. Now, hidden bullish divergence, it is not a strong kind of divergence. All hidden bullish divergence tells us is that there could be continuation or sideways motion. Right now, we're in an uptrend. That continuation on the hidden bullish is telling us that we could see continuation to the upside, but it's usually not as strong as if we had some strong bullish divergence. And if you can see, we've been running on Bitcoin on hidden divergence. From here, all we created was hidden divergence, right? And we're running on that. On the 4-hour chart, something similar, right? Hidden divergence. Here we had some strong bullish, started running with hidden bullish, and now we were creating some bearish divergence here on the 4-hour, which is also not playing, so we're gonna get rid of it, right? But we were like saying, watch out for it. It could play, right? And again, all I was looking for was just that flag formation to come through, right? Like we did here, small flag consolidation. Doesn't have to be long. I was looking just for some flagging to happen before we actually broke back up again. We just ignored it. So now I'm looking for a flag to form up here for us to get some kind of continuation. Usually on a healthy market, let me go to another chart that might not be so busy to the upside. And then I can talk about divergences and things like that and go into the daily and talk about whether or not the bottom's in, right? So I want to use this. Usually during healthy markets moves, what we see is it's a rally with a kind of drop and then a rally and then a drop, right? Not talking about Elliott wave or anything like that. All I'm talking about is, market motion. So we see a rally and then we see a consolidation period. Usually that comes in the forms of bars, right? You have your nice move to the upside, and then you have your flag formation before you break back to the upside again. Then you create your flag formation. Why? Because on these 2 points, you're creating divergence, right? You're usually going up on your price, and your oscillators, right? Your MACD, it is coming down, right? So you're creating strong bearish divergence, or your relative strength, right? You're going higher, but you're not as strong as you're going higher, right? Usually your relative strength is less. That is the RSI, moving average convergence divergence, right? So this is basically what MACD stands for. And here we're also seeing this divergence develop, right? And usually when we see this, right, your oscillator is going opposite to what your price is, this strong bearish divergence, it would indicate that we're seeing a downturn, right? Or price action to the downside. So here we could see potential flag formation for another break, or, even a small downturn, right? Because we are developing strong bearish divergence. That tells us that the trend is weakening. We should be expecting to see some kind of reversal or some action to the downside. And, that is usually what we would be looking at when we're doing this. Now, we already talked divergences a while back, but we'll do a quick refresher, and I'll just draw them out for you guys real quick. Because in case some of you guys don't know this, and then again, we're going to talk about whether or not the market bottoms in, then we're going to look at some other assets, right? So, divergence types. Let's talk about the bearishness first, right? The bearish ones, the ones that tells us the market might move down. This is your price action, right? Your price line here. and you're basically going higher in your price. The first one that we look at is strong bearish. Now, strong bearish is going to be looking something like this. So this is your price, and down here's your oscillator. It doesn't matter if it's a MACD or the RSI, right? But what we're looking at here is the price going up. What? Yo! Yes, for sure, Andrew. Thank you very much for that, man. Much appreciated.
Thank you very much.
Thank you very much, man. Awesome kind donation, man. So what we're seeing is strong bearish divergence, right? That strong bearish divergence, what it tells us is that we should be expecting to see some price reversal, right? The trend is weakening. We should be expecting to see the price to go back down. Usually what we see here is either a flag, like I was saying, or, a downturn of some sorts. That's the first type of divergence, strong bearish. Now, the second divergence that we're going to have, it's, we are topping out on our price, right? We're creating a double top. And our oscillator is going to be looking somewhat similar, right? So we're getting to the same point on price, but we're not having that same strength, either or moving average convergence, divergence, or MACDs. It's lower, or relative strength is less. That means that we are getting to the same level, but we don't have the same strength. Thus, the trend is weakening also, right? Again, medium bearish divergence. Now we also have our weak divergence, which in this case, the price looks very much like the first one, right? Our first top, and then the second top is higher. But here, the oscillator looks just like this, right? Our oscillator is basically topping out. And what this tells us again is that although we're going higher, we are failing to go higher on the oscillator. At least we're getting to the same level, right? And this is weak bearish divergence. And these are the stronger divergence to play out. Then we have the hidden ones that usually mean continuation, right? So on hidden divergence, what we're going to see is our price is going to be coming lower, right? But our oscillator is going to be going higher. So it's just going to go like this. Now, divergence charts, right? Divergence charts basically tells us what we're looking for. And anything that is bearish, we always draw on top of the price line and on top of the oscillators. You don't mix and match. You don't go top of the price and bottom of the oscillator, right? You go top with top and bottom with bottom. So these are the bearish ones, right? And yes, there's a cheat sheet on the Discord on their resources, I think. That's where we posted it. And that's just for you guys to be able to have it real fast. And I'll need to go on the Discord and look it up. I'm not sure if it's on the resources or some trading stuff. I think it might be on the resources. I post some stuff there a while back. Now we're going to talk quickly about the bullish divergences, right? On the bullish divergence, what we see is the opposite. We see the price coming in lower, right? And we see our oscillator. I was about to draw that the wrong way. We see the oscillator going the opposite, right? So what we see here is your price is dropping, right? But your oscillator is losing strength, right? So you were dropping, so you had a lot of strength in that move on your RSI or your MACD. And what you see is you try to rally, you fail to rally, but you come back down to a lower price point, but you're doing less, or you're slightly higher on your RSI, right? So here, let's say if this is 30, you're up here at 45. You're obviously losing negative strength. Let's say you're not pushing as far down on your relative strength as you did on the first push. Therefore, your trend is weakening, and we're looking for a reversal to happen. Now, the other stuff plays very similar, right? You have your W formation, which is like, let's say this is, going the same price level, just for ease. I don't want to erase and do this again, but let's say we're bottoming at the same level, and then the price here is going to be looking somewhat similar, right? Just going higher. This will be your medium bullish divergence, and then we're going to have our weak bullish divergence, which again is going to be going lower, but here on the price, we're going to be basically creating that W shape. And again, similar stuff, right? But here again, if you look at this, we're drawing on the bottoms, whereas on the bearishness, we were drawing up here on the tops, right? And then we have our hidden divergence. And here what the price does is basically it just goes like this. And then on the oscillator, we're basically going like this, right? And it just goes like this, and it goes like this. So hidden bullish. Now, again, this tells us there's continuation. And this is what we're looking at when we look at Bitcoin, right? And we're going to go back and look at it here in the chart in a second. Let me just get rid of this lines I just drew. And go back to another chart and then talk about it right? And if you have a hard time spotting divergences when you're looking at bar charts, don't be afraid to switch it up to lines. It is much easier to spot divergences or to learn to spot divergences when you're looking at the line chart, right? So let's go here to the 1 hour chart as we have our hidden divergence, and I'll show you in a second, just for ease of explanation, how to look for this, right? So let's zoom in here. Let's go here in auto, zoom in, and I was about to change a line there, and all we do is we just come up here where you see the candles, and we're just going to switch it to lines. And if you look at the lines, it's easier to spot. There's a spike here, and you see the lines here again. Sorry, not here, but here. All right, negative momentum, more negative momentum, negative momentum, more negative momentum. Right here, it's easier to spot the bearish divergence. Right, look, spike, higher spike, and here we're coming in lower, so high spike to lower spike. Remember on the tops, strong bearish, potential fraction of downside. Now, again, quick divergence chat. Again, no problem in repeating it. Again, if you have any doubts, go to the Discord. You can ping me there or whatever. And now let's talk about whether or not the market has bottomed. For that, we must go on the daily. But yeah, I think this chart will suffice. Let's go to the daily. Let's not this chart. This one's a busy chart, the super busy chart, the one I usually hate to look at, but where we have a lot of good data, and that's why it's a busy chart, because it's so good. Now what we're gonna do here is gonna go on log scale, make sure we're in the daily, and I want to talk about this, right? I want to talk about this small moves that we're getting to some extent, and see how they look against what's happened in the past. So let's say that we are where do we want to be? Let's hide the Bollinger Bands because we're in log scale. It's going to skew everything. All right, so I need to find a Bitcoin chart that doesn't have a lot of data or bad data, and I need to look at 2019. So this chart might do us somewhat good. So we had our move here to sorts, right? I'm just gonna draw this first top, second top, slightly down, and then we have our pump here, right? And if we look at this chart, again, slightly larger, and this is from 2019, not quite 2018, where I wanted to look at. But what I'm looking at here is first top, second top, right? With our small pump here, right? That we have here, that being the small pump here. With that, with that drop happening, and now we're starting to get some of that upwards motion. Now, if we do fail to get this upwards motion, or see how it goes, right? At least gets up to this level. That's gonna be freaking good, right? If we get up to the 45,000, but just see how this plays out here. We might be in for the secondary drop, and then that much larger drop. Now, this was the Rona hitting, so I'm not sure we're gonna get something similar. If we scratch out this period here, what we're gonna see, I mean, I cannot hide it. As such, but if we skip this period, what we're gonna see is that once we got here, right, and come back down here, not this tool, the drawing tool, here we go. Once we come here and come down here, all we do is move sideways, and we're just basically getting that continuation, right? So if we don't get that Rona phase, what we can see is that small drop coming through here again, bottoming probably slightly lower than we had bottom here, so we could be going slightly lower still. Again, the 10 to 12K range that we've talked about, and then get that upwards motion coming through, right? I'm not saying that is the actual move, but again, it's just some similarities versus what has happened in the past. So let's get rid of these lines. Let's finish Bitcoin, right? Yeah, I mean, that is a good theory. Sorry about that. That is a good theory. I'm not going to deny it, but I want to show this here. I think it's on this chart, and on the weekly I need to go. Bollinger Band's hidden. Let's go to the weekly. And log scale, right? So that is a good theory. And now what I'm looking for, or what I'm looking at, is every time Bitcoin has had a parabolic advance, we've dropped around 80%, right? And we already talked about this plenty of times. So from here, the high point to the low point, right? We're looking at around 86%. Right now on that second motion right here, from the high point right here to the low point here, 83% is usually what we've been calling it at, right? So 1, 2, right? So 86, 83. If we're diminishing every time, because we're also getting, we're going higher, but we're not going as high percentage-wise, right? So if we are diminishing every time here, we should at least be expecting to see something around the 70s, 80s. And I don't think Bitcoin hit that 80s, right? We've hit 78. It could be that is the bottom, right? Or somewhere close to there, it could be the bottom. I'm not saying it's the bottom yet. Because if we followed that 83 to 86%, we are looking for that 9K zone. And we do have a CME gap around the 9,000s. So I'm not 100% sure. Now, something that I would rather see for the weekend, it is flagging. And that's going to be important. And it's important because, if we look at the CME futures chart, we know we have gaps. Let's go here on the daily. We have 2 gaps that we've been looking at, right? A gap here and gap here. Now, to the downside, we only have that 9K gap. That's way over here, right? That 9,700 gap. And we haven't really been leaving gaps back here. Everything has been very nice. So CME's close around the 19,550s. We need to be somewhere close to there. Otherwise, if we start to run a little bit more, all right, let's say we're around the 20,000s. So we're around the 20,000s. And we start to run from here. We're going to leave a gap down here. And that gap eventually at some point in time is going to have to get closed, right? Now, this 9K gap, we need to close it eventually, right? We need to close it eventually. I'm not sure this is a breakaway gap. I'm not sure it's going to be a running gap. We've never come back down to close it, right? We have never come back down to close it. It'll be so much healthier if we just closed it and then we have no gaps, right? All we've done, what we're going to have is gaps to the upside, which are easier to fill. We need boring 2 weeks now. Not sure, man. I mean, I was looking for this kind of move to happen towards the end of the year. The end of the year, if you guys remember, I was talking, end of the year, people having disposable income towards, having bonuses, Christmas bonuses, end of the year bonuses, whatever, quarterly bonuses, semestral bonuses, whatever bonuses you're getting towards the end of the year. And when people have disposable income, they usually want to invest. Now we have that whole FTX debacle. That could have been something that happened and pushed crypto's rally towards the end of the year. And we're getting some of that delayed rally coming through, right? Maybe. But if you remember the December talks and November talks, usually we could be getting a good end of the year rally. And that's what I was expecting to see. Now we're getting it on the second week of, January, a little bit more, 2 weeks delayed, or 3 to 4 weeks delayed to when I wanted to see it, but it's still there. Right? All right, so that's it for Bitcoin. Let's go check out Ethereum real quick. All right, Ethereum on the daily. Let's see what's happening there. Again, Ethereum extremely nice, breaking the 1,514, right? 1,545. I'm glad to see Ethereum running because it was kind of not seeing it run with a lot of strength until right today. So this candle's insane, 6%. That's very nice. And overall, nothing bearish, right? Just overbought. 84.86 again. Want to see some flagging because we just started rallying on January, right? Year opening, even the 1st of January, right? Green, and it's just been green. No flag formation. That is not healthy. We need to consolidate. Let's go on the 4 hour. Again, look at that insane rally. Here, if we had divergence, and I think we had divergence here, it flagged a little bit at resistance before it actually broke through and managed to get higher. And I'm just going to draw that line. Again, the move coming here, right? Strong bearish divergence. Strong bearish divergence. A move coming here, right? And here. I'm gonna draw. I'm gonna have to double check that MACD against the RSI. I'm positive we have it. Just the MACD, it's a little bit iffy. I assume, and yeah, we do. Right, so I'm just gonna this here and here. So we had the bearish divergence, flagged a bit, and now we're getting that secondary rally, and that's because Bitcoin's pumping. And right now it's just looking like Bitcoin, right? 4 hour Bitcoin was dropping. We're getting that drop happening in Ethereum. Nothing bearish on this move, right? Going higher, more positive, and higher still. Even from the previous island, we're also going higher and higher and higher still. Chart. Man, nothing bearish, at least not in the short term. On the larger move, I mean, we could say when we talk about the back here moves, which already played out, strong bearish, we could say action to downside, maybe side motion, but, mainly action to downside. And again, not playing out with a lot of strength. Hidden divergence probably coming through. Let's see, not here. probably back here, right? So back here, divergence. Right, from here to here, from here to here. Right, we don't have quite here. We have it against the RSI. Interesting. Not against the MACD. So here divergence, right? Hit divergence, hit divergence. Now in that rally, and then that rally, what I'm looking at on the RSI only, not against the MACD, but we have this divergence sort of coming through. And again, it's hidden bearish. Starting to get that flag, not flag formation, just looks like a U-turn, right? Like we're going up, and it looks like a shift in trend more than a flag, but it's too early to call it, right? Flags usually start to, you know, chop and break down from like here. So it would have been nice to have seen some of this happening here. This looks like we're doing a U-turn so far, right? If we were going to the smaller time scales, and we could look at this in the 15-minute chart. It's not as steep, but here on the 15-minute, it looks like a small flag just going sideways. It doesn't look as bad as we were looking at them on the 1 hour. On the 1 hour, this was looking like it was just going like this, right? So that's not good. Usually those U-turns, it's not so good looking, man. And let's Hank Soulman. What's up, my friend? How's it going? Let's go back here. Let's go to the day 1 hour. There again, not liking the way we're doing that sort of U-turn. Again, divergence is there. It's hidden divergences. It's in the larger move against the RSI. All it tells us is, you know, it's strong bearish. So potential action to downside. And what I'm looking for, again, like I said, maybe get some flagging going on, and see if that flagging gets us to get continuation, right? Because I think the move on the daily also needs to flag. Hopefully not a sharp downturn. We've already stated that, you know, we're going parabolic. Not the healthiest move, right? But at least we're breaking the stagnancy that we had. You know, we talked about Monday, and Monday's stream was becoming stagnant because we're not getting a lot of nice action. Yes, we have been getting some slight action to the upside, but not the strongest to break anything, right? And let's do ADA, man. ADA, then I'm going to give you continuation to Gala. And Andrew, I know you donated for LQ and WMT. We're going to do that in a second, though. I just want to do ADA real quick. Again, we had the strong bullish divergence in ADA. I've talked about, again, that pump. And you remember what we were talking about, right? This is about to get undone. We had that hidden divergence when we were looking at this. We were waiting for Tuesday's candle. As you can tell, Tuesday closing slightly higher than this previous high here, and getting rid of the divergence that we were looking for. So that's pretty good. And again, very nice continuation at 35.5. Right. Overbought at 81.10. Let's go to the 4-hour chart. Bearish divergence strong, right? Not good. That could tell us that we could be topping out. Again, potential shift in trend, right? Strong bearish divergence. Potential fraction downside. Again, right? We're sitting bought at 77, overbought at 77.63. So we're getting this strong bearish divergence while we're being overbought. Again, remember, from overbought to overbought usually tells us that the trend could be done. Now we know, and we've talked about ADA potentially being a predecessor, I could say, or a marker for the turn that we're getting, because ADA started to pump a little bit before Bitcoin started to rally. And then we also saw Gala, which I think it was the one that Preparing for War requested. We talked about flagging on Gala, and we're going to revisit that real quick. So, again, bearish divergence, strong potential fraction of downside. We could be looking for a small movement down here. Let's see the 200 moving average. That's fine. And, yeah. So, Bollinger Bands expansion. The upside, again, bearishness could be coming back down. We are extended outside the Bollinger Bands. We know usually when we extend the Bollinger Bands, we do tend to come back in. So, again, if we start to move down a bit, Bollinger Bands are going to be, keep on moving outwards. We're going to come back into the Bollinger Bands. Not necessarily have to go bounce at the 20, but it'll be healthy if we do revisit that 20 and then see where we go from there. Movement-wise here, short-term moves. There was some hidden divergence here on ADA, 4-hour, just so we can finish this and move on to the 1 hour. Here, and here against the RSI, right? So hidden divergence, bullish, potential fraction to the upside, continuation. Again, we're starting to flag. Not a bad move here, getting that reversal and pumping now. So bearish divergence now could be leading to some downwards motion, right? Let's go to the 1 hour chart. Hex Huddle, man. What's up, man? I haven't seen you in a while. Thank you very much for stopping by. On the ADA shorter moves, right? Shorter moves being the previous island, which is here. Here, nothing bearish, right? Even on the shorter here, nothing bearish. ADA had some kind of bearishness happening back here. And it's from here to here. Right from here to here. and from here to here. Again, that would tell us that we're looking for a potential movement down. Now it failed to play out. Why? Probably some hidden divergence. Right now, I'll have to spot it in a second. I haven't really looked for it, but I think we could have some hidden divergence. Maybe we don't, but we could. Let's see. Low, higher, low, negative momentum, less. No hidden divergence. All right. So again, probably just because the market just kept on rallying, ADA got carried through. Still holding on to that 20 very nicely, and seeing that nice pump happening again. Not as high as here, right? Pumping from the previous high here to here is not a lot. So ADA flagged a little bit, and I think it's part of the reason for that happening is ADA was rallying extremely nicely before Bitcoin started to rally. Right, and you can see ADA started back here on December, 1 or 2 days before Bitcoin started to go green. Let's do Gala real quick, because Gala did exactly what we called for. Flagging, and I'm not sure if it's pumping now, but it created a flag, right? Remember we talked about Gala flagging here and how we needed to flag. It was a short flag, 3 candles, and now we're getting a rally. And we are creating strong bearish divergence against the RSI, not against the MACD. Again, early to call or tell, 100%, but it's here. Strong bearish potential for moving down while being overbought. That could be leading to an end of the move, right? And that's what I was telling Prepare for War. And I told Prepare for War is just wait, because we might be getting another rally coming through if we flag, right? Get that flag formation coming in, and then get that move to come help us. So we can see here, again, it was here. We flagged a little bit right before we get that new movement up. On that movement up, again, same strong bearish divergence developing here. But here we have it against the MACD and the RSI, right? So again, we need to pump quite a bit more for us to get rid of it. And this was precisely what I was calling for Bitcoin to do when we were talking about the divergences, right? I said Bitcoin could go and flag a little bit, right? Some downslope consolidation, get that new pump coming in, then create some strong bearish divergence on that spike, right on that pump, and then see some downwards motion potentially coming in, right? Or call it an end of the small rally that we're getting right now. But the good thing here is on Gala, we also developed some hidden divergence. Again, we just see that whatever negative momentum we had here, not match what we had. And let's go to the 1 hour again real quick to see what's happening here. This stuff came in from the daily. Let's get rid of it. And let's do the 4 hour, the 1 hour. So on the 1 hour chart, again, getting that nice rally coming through higher and higher still. So nothing bearish here. Not going to be looking for anything bullish. All I'm seeing on the 1 hour is we're pumped, flagging, downslope consolidation, could be coming in for another small pump. We don't have anything on the 1 hour, but again, the 4 hour and the daily have bearish divergence. That could be indicating that maybe we could be getting even more off a movement down, maybe the 20, even breaking that 20 and coming back down to this here levels, the 4.1 cent mark right now at 4.9. So with that said on this one, so let's go back to the Bitcoin chart. I forgot to do something here on the Bitcoin chart, and it was look at the 200 moving average on the daily. So we're going to do that real quick, and then after that, we're going to be looking at Andrew's coins, or Andrew's requests, right? If you are new to the channel and you haven't hit the like, give us a like. It costs you nothing to leave a like, except some finger motion. Yeah, that's what she said. No, just some finger motion. Go hit like, and that's it. If you want to subscribe, that's fine. But, if you want to hit like, hit like. Johnson. Yeah, I could go to market cap in a second. We already talked about market cap. I'll just revisit real quick to answer your question. We're below the trillion, right? We're at 935 billion. So... Sorry, 935 billion. Talk about that in a second. Bitcoin, the 200 moving average. Have I switched this? 200. This is what I want to look at. It looks so crowded. Let's go to another chart. This one, it's probably gonna be worse. I can tell you that right now. Let's see if we can get here. It's actually better. All right. So getting above that. Oh, see, the volume bands do everything. That's because I'm on log scale. Let's get rid of the log scale. Here we go. All right. I just want to look at time period wise, from, once we broke here to when we recovered. Now I'm going to try to be a little bit more precise than I was on the market cap one. So we broke here and started here on April the 2nd for that rally. It's 383 bars, right? 383 bars from when we dropped here to when we actually broke that 200. And then we got some kind of nice upwards motion. Then we kind of got this shamble. We broke back below. And then we're fighting with it until we finally declare that we want to be above. And that's a that's a whole another year, right? Because here we're looking at April 2019, and here we're looking at April 2020. So like I said, a whole nother year happened before I actually got that nice break. But here, since we broke here, right, and we can just say we broke here on this candle. That's when we rejected, and to here when we're getting that break to the upside. We're looking at 378. So about 10 bar difference, right? 10-day difference. But it's extremely similar conditions, right? It just happened that it took 388 days, and now it's taking 378 days for us to break back above that 20. And like I said, I'm not going to count it as good until we close there for Monday. Why? Because the weekend volume sometimes tends to be undone on Sunday evenings. We haven't seen that in a while, though. But sometimes Sunday evenings tend to undo the volume that we gain on Saturday. And then we open Monday where we left off. So if that is good, that would tell us Monday could potentially open somewhere around here, right? The 19,920, which is, again, what I was calling for us to go to. So we open for CME futures about the same level. And we leave no gaps, right? If we leave a small gap again, move to the downside, we close it and then start to get rally. But Monday, if we close above that 200, it could start this phase here, right, of the markets. We could see phase. I need to go back to the log scale and hide the volumes. We could see sorry, not log scale, just auto. We could start this phase of the market. We get that small rally, maybe not going as high as we were before, right? Here was like 19,999. We got to the 14,000s here, 14,100s. And again, that could leave us somewhere around here, maybe the 40Ks, right? But market cap real quick. 936. Market cap has to be above 1.03, right? We haven't gotten to 1 trillion market cap. We need to get above that level. 1.03 trillion, and then we're good. Once we get there, Bitcoin's probably going to be hitting. I think when we get there, Bitcoin's probably going to be hitting around the 25,000s, right? Or close to 25,000s. And if we do get there, man, I think we could be talking about different market conditions. Again, potential rally coming through, small term rally, towards 2023, and then get some breaking down happening towards 2024, and then start to talk about rally happening. Like I said, about a year now, right? So, yeah, but market conditions look extremely similar. So with that said, let's bring up the tap tools. That's what we're looking at, right, Andrew? Tap tools? That's where we find these things? LQ to ADA, here we go. I want to look at this real quick here and see what's going on, man. This seems to be going, trying to rally, I guess, but doesn't look as healthy. 4-hour chart. Bring the daily. Yeah, you're welcome, Johnson. Again, 1.03 is key. Getting above that zone is going to be super important. 1.03 trillion market cap. Staying above the 200 is super important as well. Like I said, we're in a bear market when we're below 200. Sometimes we do dip and then we recovered. We saw that happening in 2019. We saw it happen also when we were topping out on 2021 when we topped out. We talked about that happening, and how we dipped slightly below 200, how we could be going into the bear market if we didn't recover quick. Now here we need to hold that 200 moving average. Failing, not gonna be good, right? So LQ is wow. It's I don't have a lot of data going back, Andrew. It's not good because you're doing close to all-time lows, right? Close to all-time lows. So if we do FIP this, it's not gonna do us any good. even on the short-term fibs, right? If we go with our Fibonacci's here, we're not getting any kind of real pumping coming through. But our target, if we're going here with this, it should be around the 48.10, right? Yeah, I think it's gonna be an interesting next few months, man. I can't wait for Monday. And we come live on Monday. I just happened to jump in tonight because, yeah, War said if I was going to jump in, again, I did some analysis on Discord here earlier, 10 a.m. 11 a.m. And, talked about Bitcoin real quick. Not getting a lot of time to come live as I used to. I open up a restaurant, and it takes a lot of time to be there taking care of it. So, again, market conditions were not good. Ever since March last year, I started to say, guys, started getting out of crypto. I started putting money into other things. Now I'm thinking about shifting money back into crypto, particularly if we stay above that 200 moving average. Definitely going to be interesting to put some money short-term on crypto, looking for some positions to be held for the next couple months. But that 200 needs to be held, right? And that's going to be a key area for entry. And if that is the case, then again, put some money into crypto, get some nice returns, get out of Dodge, right? You chef it? Awesome. Yeah, I opened up a small restaurant also. Got some 3D printing business started. Take some profits out of crypto, do something else, right? Start some side businesses so that, next bear market comes, you also have some side businesses going on. Get some money out of crypto before the bear market hits, or as the market's starting to look like it's going to go down, shift it in, start other businesses, right? Always start to create side revenue streams, right? So it's going to be, that's key. So high, lower high, coming in lower and lower still. Man, Andrew, not really seeing a lot here. There is bullish divergence. That is the only good thing happening. That movement's coming here, and that is, again, to January, the beginnings of January. So something similar to what's happening with the crypto market. But since this pair is trading against ADA, I think it's quoting against ADA, if I'm not mistaken. I don't think these are dollars. I don't think these are dollar values. But you could correct me. I think it says it's 42.5 ADAs. So that's where we're at. We could be looking at something similar, right? Again, bullish divergence going on there. Potential fraction to the upside. Let's go to the 4 hour, man. The 4 hour was not looking super good. Particularly when we were zoomed in. A lot of tightness of the Bollinger Bands, slight expansion, getting slightly more expansion now. But the thing I'm looking at here is strong bearish. So again, we're getting contradicting data, right? Look, coming up here higher. And here, oh man, even if I'm gonna have to, can I? Yeah, here we go. I wasn't sure I was able to make this larger, but here we go. Strong bearish, right? Against the RSI, against the MACD, not against the RSI. And what that tells me is that we are looking at, potential for action to downside. So the daily is set action to upside, the 4 hours says action to downside. Let's go to the 1 hour and see what we have here, man. Yeah. Here, the RSI is not looking super healthy. It's just going almost to 100%, 96. And then it just goes extremely low. So any moves are shifting it quite a lot. And here the move wasn't even that wild. We got a massive drop. So to the 1 hour, I would not be paying a lot of attention to, particularly against the RSI. I'll just look against the MACD, right? And MACD says there is some bearish divergence strong, right? We're ignoring it. We're just moving sideways up here, even here, right? And we're trying to rally now without us going positive. So yeah, not the best. I want to go back to Bitcoin in a second. I want to talk MACD strategy. I just wanted to come do these coins. Andrew had requested them again. Bearishness on the 4 hour and the 1 hour, bullish on the daily. Andrew, again, not the best data to look at, but let's bring in what metric tons, right? WMT. I don't want to connect my wallet. I don't even trade here. Bring up the chart. Okay, after this one, we go back to the corn, right? Look at this contract. See how it's doing, man. I would not be surprised if we're looking at, something somewhat similar on the daily. Hopefully getting some kind of rally coming through. Wow, we had a rally already before. Interesting. A rally started here on November. Nice. All right, bearish divergence developed. That's for sure, right? Again, we can see it here. Strong bearish, potential fraction to the downside, right? Remember that. Tells us the trend is weakening and the trend could turn south, right? Particularly with bearish divergence. Look at that. Downturn. Breaking the 20 moving average, starting to go farther down. Maybe hidden bullish. I'm not sure if that's going to hold us, man. That could be good for us to go back up, back test that 20 moving average. And if we fail to get above it and fail to get above this previous high here, man, could be getting continuation of the strong bearish divergence, right? So watch out for that move. Bearishness, right? So hidden bullish, again, trying to get us to hold. Let's see if that happens. Let's go to the 4 hour, man. The 4 hour was not looking super hot when I looked at it at our first glance when we jumped onto this chart. So let's see how it's actually doing. And let's see, man. Swimming out bearish divergence here, right? On the small move. Again, that's what started the move. Again, it's easier. It's always easy to, in retrospect, to see what's happened. All I'm doing this for is just we want to see the picture and find the reason why we're dropping. If there's a reason for the drop, if there's no reason for the drop, we could be expecting for it to be undone. But if there is a reason for the drop, then we need to get a reason for a pump to come through. Sorry, but here we go again. Strong bullish divergence here. And that could be indicating a reversal. We just have it against the MACD, not against the RSI. On the RSI, we're completely oversold, not creating anything bullish. Again, this against the MACD. So moving average convergence divergence is telling us that we are creating some bullish divergence. Strong potential fraction to the upside. Again, target the 20 moving average. That's going to be at 0.61. And if we do hit that, watch for a potential break above it. If we fail and reject, could be moving farther down. And then again, the bullish indicators will be failing to play out here. That would tell us that the bears are in control for this asset, right? Let's go to the 1 hour. And here on the daily, I forgot to look at the fibs. We need to do fibs for this. Bearish divergence back here as well. Again, easy to see, right? High on the MACD, slightly lower on the MACD as we're coming up higher here on the price. That's what started downturn. All I'm looking for right now is bullish divergence. Are we going to have something that's going to tell us that we could be looking for a reversal? And from this island to this one, we don't have it, unfortunately. All right? Negative momentum, more negative momentum. On the RSI, coming in lower. Now on the RSI, on this tail end bit of the move, right? This last move here, strong bullish. Again, move up to a 20, right? That's usually the first target we call for when there's no other supports and resistances. So the 20 moving average, hit rejection, start to move sideways. We might try to go for another crack at it, particularly because we have the bullish divergence, right? That could try to get us to break back up to the upside. But again, overall, not super hot. Let's go here on the daily and bring some fibs out, man. Because I think this made a valid retrace by all means. I mean, there's no way of denying that this asset made a valid retrace, right? How do we know it's a valid retrace? Because we retraced higher than here, 236. We're hitting that 382, hitting that 50%. We rejected the 618 with a wick, right? So good retrace, hitting the end of that golden mean ratio, right? That 618 to 382, and breaking back down below at 382. So our option right now with the bullish divergence that we're spotting on the lower timescales is get back up of that 20 on the daily. That 20 happens to almost be lining up that 382. Again, very nice, man. Nathan says, by the way, I always love the analysis. And if you find yourself in Reno, VIP at the restaurant. Thanks, man. I appreciate it, my friend. Yeah, if I ever go to Reno, hit me up. If you're on the Discord, that's the easiest way to communicate with me sometimes. I do try to check the Discord as often as I can. Again, right now with the kitchen, I'm usually a little bit more busy than usual. But yeah, for sure, man. If I'm in Reno and you're in Discord, I'll hit you up. All right. Oh, man. Drinking some Irish whiskey. I never seen this bottle before. I think it's called Sexton or something like that. I'll show you guys here in a second. It is a crazy looking bottle. Yes, I'm over the drinking age. This is what I'm drinking right now. It looks good. It's not as good, man. The bottle looks really freaking cool. I hate the pouring lip. This portion here, when it's full, it's so hard to pull, man. Drink like chef? Yeah. I think, and I'm actually drinking it on the rocks right now, and you can hear it here. I'll jiggle the eyes. But I think this is going to be so much better in a cocktail. And from reviews that I already looked, because when I first tried it, I was like, oh man, fuck, I hate the flavor of this one. I like other Irish whiskeys, like the Middleton, even some of the Jamesons, but even basic Jamesons, but the 18 years, and then they came out with a lot of weird cask Jamesons that I haven't tried. They're good. Usually more of a Scotch drinker, but this one I think I could do some nice cocktails with. I have a small smoking machine or smoking. Yeah, I don't want to say the other word, but a smoking gat. Where you put the small wood chips on top, you light them up, turn it on to a fan, it just blows smoke into a small hose, and then you can put a dome or something over the drink and really get some nice smoke flavor onto it. I'm thinking what I could do with this whiskey where I could put that smoke flavor into it, but add something else to make it a nice cocktail. That's gonna be really good. You're drinking Woodford Reserve. Nice. Yeah, I have the Breville one. Was it the Poliscience? I think it's the name. I have this one. It's all in Spanish though, not this one. It's pretty good. Booker's bourbon, nice. I also like Monkey's Shoulder, but yeah, this small smoking rig, it's pretty good for. I smoke bacon. I don't want to smoke it on a smoker. I discovered through experimentation that if I smoke the bacon after it's cooked in the oven, yeah, all good and not good the same. Yeah, when I'm doing the bacon, and I'm bringing in the. I usually just put it in the oven, season it super well, cure it just by the pork belly, right? Just cure it with some salt, hit it with some nice spices or rubs or whatever, and then just toss it in the oven, cook it there, bring it out, wash the rub off it because then it's gonna be super harsh taste on the bacon. You don't want to have that rub. You're not barbecuing that bacon. You just want some of the spice flavor to stay there on the outer rim. You're not gonna get a smoke rim or a smoke ring by smoking it with the little rig, but you're gonna get some really nice smoke subtle notes. They're not gonna be harsh, but are gonna be really good, and it is super nice, man. That bacon's like tip top. A lot of people like it. So yeah, that's it for this. Let's go back to Bitcoin real quick. Where's our Bitcoin, man? Here we go. I wanted to talk about something on Bitcoin. I think we talked about fibs. We didn't do fibs on Bitcoin. So we need to do fibs on Bitcoin, but we're not going to do it on this chart. We're going to go to the other chart. I don't think we're going to be making a valid retrace on anything major yet, right? We're on anything major, but I want to move back here real quick. And just for argument's sake, let me see if I can get this to zoom in here. Yeah. See this 2019 portion of the chart that drop with the small pump, drop, and then pump again? Right? That small W formation that we made before we got this drop. Right? Just remember this small pattern, right? Look at what's happening here. It's not going to be exactly the same, but it's going to be similar, right? Getting that drop with the small pump. Here on the drop on the other chart, we came, on the other part of the chart, we came slightly lower. Here we're not doing that. But we're getting something extremely similar, right? Eerily similar A drop with a small drop, and then a reversal. I'm going to go back and measure how long it took the other one, and then we're going to measure how long it took this one. Oh, no, not that. Yeah, this one was super short. The one we have right now is going to be much, much longer. So again, this one, about 32, about a month. This one's going to be probably more than 2 months, or somewhere around 2 months. You go from here to here, right? Again, 60, well, I went one over 67 bars. So it's 2 months, a little bit over 2 months, right? So yeah, interesting, right? That we're doing somewhat similar. So again, if we do get a drop, I would not be surprised. Again, not, like I said, not really sure we're out of the woods until we get above 25K, right? 25K is a price to beat. Not above 25K, man, things could still be going south, right? Let's just be realists. Even right now, we're still seeing some action to downside coming in on Bitcoin. And that just comes with the flag that I was calling for, right? Since, Monday. We need to get some flag going on. We're getting it today. But look at that, right? Impulse up. We're trying to hold on to that 20,911. We're losing it right now. Not the end of the world. We need to flag before we get continuation. If we are to get continuation, then create some bearishness on the daily, right? It's good stuff. Now for the fibs. So on the fibs here, if I were to fib from here to low, definitely getting almost 100% recovered, right? So that fib's not going to do us any good. Now, anything major, like if we go from up here, we're definitely not going to be making any kind of valid retrace, right? No way we're making that 236. But if we do go for a 336, we're looking for 27,000. So again, 25,000 is super key for us to get to. And I would not be anchoring from up here. I'll be anchoring from up here once we start to get that retrace going on. But our first area to look for is from this high here to the low here. Right, that's at 23,000 and then 28,000 for that 382. So this looks a little bit better, and I'll tell you why in a second. And I'm just going to try to pinpoint this a little bit more accurately. There we go. So 23,000, 27,000, right? This will be matching the 238. Sorry, that 382. I was dyslexic there for a second. From high to low here. Just want to get close enough, right? This, it's kind of matching with this. It's a $200 move, right? On a $28,000 move, right? So $200 is going to be a 1% move. Again, close enough, right? To be almost confluent and have some confluence there. But again, could be an interesting resistance. So 25,000 is going to be key. Then 27,800, 27,600 is going to be a key area for us to get above. Reason why I'm saying this is going to be making more sense is because from the high here to the low here, we made a valid retrace on this pump. Right? We went to a 382 and hit it, then rejected it, right? So valid retrace made. Now our new fibs come from here to here. Because from here to here, I don't think we've made in any of this hits, at least from the high to the low here, a valid retrace, right? So these are the fibs I'm looking for right now, and the areas that we must be looking for us to get above. So again, look, we also happen to have a resistance right where we have this 236 at 23,173. We have a 23,220 again on a $23,000 move. The fraction that we're off is not going to be significant, right? Yeah, Scrog, look, you cannot go back and bid yourself for the past. You're going to keep on creating the same mistakes if you do that. You're DCAing. The point of DCAing is basically you want to get an average. You want a dollar cost average. You don't want to dollar cost all in, right? So it's an average. Now, the way we used to do it when I was doing metals trading, working for a Swiss company, is we would be doing what we called quotational periods. So if I were to buy some metal, what I would do to hedge is basically I would have to pay the client the price of metal, but what we would do is we would take about a month, right? I went too far there, but 32 bars. So we take about a month, it's still more, but I just want to do the example. So let's say we would take out a month and we would hedge at the the spot price or the closing price actually for that asset value on every day. So if I were to buy, let's say, 30 metric tons of copper, every day I would buy or I would sell, actually, because I have to do the counter. So if I'm buying from the client, I would go to the market and I would sell, right, every day 1 ton of copper. Right now, when I would finish doing that, I would pay the client at the average of the month, right? And then because you're buying every day at the close price, right? The closing price or the agreed price or settlement price, which is actually called the settlement price. But LME settlement, London Metal Exchange, by the way. And what we would do is basically every day, again, sell one against the market, and then I would pay the client that, right? And then once this would ship and get to destination, it takes about 30 days or so, gets to China, I would sell it at a month average as well. So every day of the month, I would be reversing my position. So I'm selling it to China. They're gonna pay me at the average price. So what this would do, I would go back here. I was selling to the market when I was buying. Here I will go back and buy back my position from the LME, so I don't have to deliver it. Right? I'm basically canceling my position, so I'm hedging my price, and then the client's gonna pay me at that price level, right? But when you do this on a month by month basis, and you have it on a rolling basis, what you end up doing is you end up buying the average of the year, right? So when it drops, you're basically selling or buying at the average of the year, and when it pumps, you're buying at the average of the year. And when you do that, you basically end up with the yearly average. So you don't have the mega gains, but you also don't take the mega hits, right? That's just basically how it's done when you're doing metals and things like that. And I think that's one of the most important things to do. So if you're getting a dollar cost average, you would basically have to be buying every set amount of period an X amount of dollars. So you're basically averaging your price, right? So you would be buying a set amount, let's say $100 every week. You're not going to get the month average, but you're going to get maybe somewhat close to the month average. If it just happens that you buy it every day that it dropped, you're not going to get a month average. So the healthiest thing to do is just buy a couple dollars every day. If it was $100, you'll probably be buying around $3 a day, right? At same time. So midday, $3, midday, $3 every day. You're gonna get, you're gonna be getting. Sorry, I did that completely wrong. Because by the end of the month, you're gonna be getting close to 100, so 99. So you're gonna be getting that, $99, close to it, and then you're gonna have your average, basically, right? And since the market here doesn't have a closing price, it doesn't have a settlement price, it's hard because then you would be having to buy every hour, every minute, right? Like a fraction of a dollar, so you would be getting the actual average, but you're gonna get very, very close to an average of the month. You might be a little bit off to the upside, a little bit off to the downside, but you'll be getting a very, very close price. And just so you guys know what I'm talking about, this is the LME, London Metal Exchange, and then you have the LBMA, which is the London Metal Bullion Association, which is where copper and silver trades and some other precious metals. But at least here, you can go here and go to non-ferrous. That's what I used to trade: copper, zinc, or lead. Sometimes aluminum. But here you can see the price, and you can see the settlement prices, right? So these are the LME official prices. Cash settlement for bid and offer. You have your 3 months forward, then you have your in the year 2024, 25, 26. And again, you can see that the market is expected to go into a backwardation stage. And basically, backwardation means that the future price of the asset, it is lower than the actual price. But on your 3 month basis, you are going in contango. That basically means the market is rising in the next couple of months as you are also rising. And this has to do with something that's going on with China and smelters that usually you tend to see the price that could be going down. But yeah, this is how basically you do your trading. And then you can buy 3 months forward, you can buy cash, you can do whatever. But again, market contango, and then you go into backwardation. Basically, when you're in contango, you tend to hold your positions. You don't want to sell them as fast because you believe the price is still going to be going higher, so you want to sell them. Maybe it's gonna take a couple more months for you to go out and sell that material, so you get a better deal with smelter and get better bang for your buck, basically. And when the market is backwardation, you basically want to hold short positions. You want to be short on stock, right? So you want to be basically moving your material as soon as you buy it, because you want to sell it as fast as you can, so you don't get that hit by that price drop, right? And that's usually how it goes when you're trading this. But yeah, that's that rolls. And then you have your LBMA, London Bullion. Here we go, LBMA. And here you would now. They used to have the prices. They used to be free. I'm not sure if they're still free, but let's see the precious metal prices. Here we go. And then you would go, yeah, here we go. Here we have the chart for gold. You can look at the AM or PM prices. They tend to close twice a day on the trading rings. We can see that gold's also going up, so that's pretty nice. Against dollar, British pound, euros. You can look at the silver, platinum, palladium. Yeah, LIBOR. This is basically rates. Your LIBOR rates. London interbank interest rates or something. I can't remember what LIBOR used to stand for. But basically, the LIBOR rates are your interest rates. When you lend money, you do it at LIBOR, like you would do it at in Mexico, TIE, or the US. They used to be the Fed interest rates, basically. Right. So yeah, interesting stuff, right? So small learning session. Let's look at. We haven't looked at dollar index in a while. Check that one out. Dollar index at 102. Man, it is dropping, right? Part of the reason that Bitcoin's rallying. We're looking for some bullishness here. Remember, towards the end of the year, December, we did get a small rally, but still dropping, man. Nonetheless, right? Still dropping. And now we could go from one island to the next. Remember, we didn't have that option. We had a small break here, but we didn't know if we were going to consider it. But look at this move. That's strong bullish. So we could be looking for potential strengthening of the dollar to come in the next couple of days. Again, this island is starting to develop. We could be going and making more negative momentum. But for now, it tells us that we could expect to see a sort of reversal to take place. Maybe a trend weakening and, see a dollar rallying that could come with a drop on the price of Bitcoin, right? Let's go look at the gold real quick. I'm not going to look at silver today. I just want to look at gold. Let's see this. Where's our XAU? Here we go. 1,920. Very nice rally at resistance. 1,922. We've hit it. Highest point, 1,921.86. 1,922.43. We're within a dollar, man. Within a dollar, right? We had the bearish divergence again, just like we had with the dollar. Remember, we had the bearishness on the dollar, so we had the bullishness. Sorry, here we had the bearishness. So we're expecting something opposite to happen. On the larger move, on the hour side, we don't have it right from here to here, coming up higher or positive momentum. On here on the MACD, whatever we had here to now, we've lost it because we clearly have two breaks, so we have to, at least honor one of them. Because this one was so minor, it was just a small dip. So I would consider this one island here. And then from this island to this here, we don't have anything bearish. So that could lead us to believe that gold could still go on rallying, and it would not be weird if we see something like that happening. Oil also starting to get a nice uptick here. Not the strongest, but every time we had bullish divergence in oil, it has played nicely to the upside. Here we also have some bullish divergence strong, right? Here. Starting to get that nice movement up. So yeah, would not be weird if we see oil come up to probably 87 bucks. I would bring in the 20 moving average first. We don't have it showing it. We haven't shown the 200. But the 20 moving average would be a primary target. We're above it, so that's good. So yeah, maybe around the $87 or so. Why am I calling for $87? That is, I think it was close to where we were rejected here. We were finding support and resistance. So 83 here, and then resistance here on 88, right? So some kind of resistance here around 88, 89. Somewhere on this zone, we could find some resistance, and we can also break fibs from the high point here to the low point here. And again, 84, right? So close to 87. I was just eyeballing the data by looking at the chart and trying to get an estimation as to where we could be going. I think $84, $87 could be a nice target for oil before we look for something bearish and then maybe get some reversal. Short-term move as soon as we get higher than here and we're not as high on the MACD. We're going to be creating some bearish divergence. That could be putting pressure on the price. That could be coming around that resistance at $84 that we saw on the RSI when I showed it a couple, on the fibs when I showed it a couple seconds ago, right? to Bitcoin, 20,800. Man, Bitcoin is to keep on pumping. Keep on pumping. Yeah. So, man, it's nice to see you all tonight, man. I really appreciate y'all guys showing up. I know I haven't been on that often. Really want to come live tonight for a little bit. Talk crypto. I need to go check on the daughter. She was throwing up a lot. So, the wife is with her. But I had to go run out. I wasn't sure if I was going to come live. I had to go run out and get medicine and things like that. Hopefully she's a little bit better. It's gonna be a hell of a night. Usually when kids are sick, it's not fun. But I gotta get going, guys, and I'll see if I can join you tomorrow. I'm hammered, but crypto's nailing it. Yeah, I'll see if I can come in tomorrow. I'm not sure. It all depends on what time I basically get off the restaurant. What time I finish closing the kitchen. Basically balancing the books real quick, or at least doing some pre-work. That way I don't have to do a lot of work on my day off. But basically just close the books real quick, close the numbers, and see how things were, do a quick inventory, make sure nothing's missing, and cleaning up. Yeah, it's fun. It's fun. Anyways, guys, that's gonna be it for tonight. Thank you very much for joining me. I really appreciate it. If you enjoyed the content, hit the like, the bell, and the sub. Join us on the Discord. Links have gone out. Remember that all the information that is provided here is for entertainment and educational purposes only. Please don't trade based on what you see here. We're just discussing ideas. It's not financial advice. I'm not a financial advisor. On that note, cheers, guys. Thank you very much for joining. And join me on the Discord. Hit the like, the bell, and the sub, right? Awesome stuff you can do for any channel that you like. And then, if you ever see me live, you want to pop in and say hi, I'm more than welcome, right? We don't bite. We have a pretty solid community. Everyone's chill. Everyone it's fun to hang around with. So, guys, that's going to be it for tonight. And I'll catch you, I'm not sure if tomorrow or Sunday, but for sure on Monday for another edition of So Crypto. Until then.